the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were up today, tracking a broadly positive day in Asia. So if you look at the Straits Times Index, it was up 0.18% at 4,227 points at about 12:53 p.m. Singapore time, and that is with a value turnover of some 630 million Sing dollars seen in the broader market. But as we shared with you earlier, the STI ended in the green as well, so let's take you through the closing numbers. Well, the Straits Times Index closed up 0.27%. We are looking at 4,230 points. In terms of value turnover, that's 1.49 billion Sing dollars. Gainers outnumbered losers 314 versus 167. Top advances for today, we've got for you DBS, New Incorporation USD, and Jardine Cycle and Carriage. And in terms of top decliners, we have here Great Eastern, GMH USD, and DFI Retail Group USD. While in terms of counters to watch, we have sets because the airline caterer yesterday reported this 9.1% year-on-year rise in net profit to 70.9 million Sing dollars for the first quarter ended June, and that is on the back of growth in aviation, cargo, and food service volumes. Now, elsewhere, from more on share price movements relating to Great Eastern to how South Korea is reportedly set to unveil about $150 billion in U.S. investment plans by private companies during a summit between President Lee Jae-myung and U.S. President Donald Trump. We've got more corporate and international headlines in focus. And joining me on a Thursday is David Chow, Director at Azure Capital. David, welcome to the show.
Hi, Tintin. Thank you for having me as usual.
Great to have you as always. And David, let's start with global markets this time around. I mean, investors are digesting a couple of things. One being the latest FOMC minutes, the other being the U.S. hiking tariffs on steel and aluminium. So how are markets taking in all of these?
Right. I mean, since you mentioned about the global markets, for how it's faring, after these two news items, if you look at the the MSCI World Index, it's actually down slightly, but the current level is still pretty much residing at an elevated level, and it's trading about 50, 100, and 200 days moving averages. So still pretty elevated. And on impact of the latest FOMC minutes alone, on the market, I don't think there are any surprises, which means the market won't be reacting much to this alone. I mean, the one important thing to note is that the Fed minute actually came before the employment report released on August 1st, which painted a somewhat weaker picture of the U.S. employment. And although a majority of the participants from the FOMC minutes saw upside risk to inflation, several of them still saw the risk of imbalance, while two, Bowman and Waller actually saw employment as of posing a higher risk. So it's truly reflective of a Fed that is divided, and with the Fed not acting between meetings unless it's necessarily. I think seeing an additional report such as additional CPI or PPI report is important in how their views could actually be shaped before the all-important September meeting. So if you look at the market odds of September cut, I think it's risen to 83 to 85% probability. So I can't remember when was the last time market assigned such high probability only for the Fed to disappoint. So perhaps as for the tariff, I think imposed earlier in if you look at the tariffs imposed earlier in 2025, I think tariffs were really quite elevated. 25% on steel and aluminium in March, and the figure actually doubled to 50% in June. With gradual expansion into other products categories. So unless the dramatic sell-off since earlier in the year, I think unlike this sell-off, markets appear now more resilient this time. I think they are quite accustomed to the administration quick trajectory and how erratic Trump could be.
And let's go back to the Singapore stock market as usual, David. I mean, how did the STI fare today? I believe it tracked a broadly positive day in Asia. So any surprises when it comes to the biggest movers as well? Save your thoughts for Great Eastern. We'll talk about Great Eastern in just a bit. Yeah.
So STI actually I think stood out today for me as one of the few Southeast Asian markets which closed higher today at 0.3%. So in terms of surprises, nothing notable in my opinion. But following the release of maritime player Marco Polo Marine today, and their latest results, I think the players in this sector have gained some tractions. In fact, it's not today, but for the past few days. So investors might want to take a closer look at this sector.
And let's zoom in on some of the companies to watch, David. Before we look at Great Eastern, we have SETS, because SETS yesterday reported this 9.1% year-on-year rise in net profit to close to 71 million Sing dollars for Q1 ended June, on the back of growth in aviation, cargo and food service volumes. How would you read into the latest numbers as well as investors' reactions today?
I think they have a very strong first quarter with their core earnings up 20% year-on-year, well ahead of market expectations as well as ours. And the strength came mainly from the cargo and ground handling business, where both volumes and pricing improved, and even their food solutions unit grew as aviation catering actually picked up. And along with that, we also saw improvement in margins, which improved across the board thanks to a combination of scale and better mix of aviation-related volumes. However, there was I think a temporary dip in free cash flow because of some delayed customer payments, but those have since normalized. What's more important is looking ahead, while global cargo demand is expected to somewhat soften, Stats has consistently outperformed the industry by winning new airline customers and expanding wallet shares with existing ones. And from what we could see so far based on data we have tracked, passenger travel demand also remains resilient, and with the debt refinancing underway, I think the company is in a very strong position to keep delivering growth.
And finally now, David, we can talk about Great Eastern. Great Eastern is resuming or has resumed trading today after a proposed bonus share issue, which lifted its free float to above the 10% required. Any thoughts on the movements today, given the failed takeover bid by OCBC? What is the outlook for Great Eastern? Just down 47%.
Yes. But, when it opened in the morning, was down by around 50%. I mean, it's not to say 50%, down 50 versus down 47 is a lot. But it's certainly shown the volatility in the discounter today. So Great Eastern, it's back trading today after almost a year of the market. And, the key reason is that, its bonus shares issue has lifted the public float back above 10%, which is the minimum required by SGX. So, while, this comes on the heel of the failed takeover bid by OCBC, which unfortunately didn't get enough support from minority shareholders, I think that rejection showed that, investors felt, the $20 offers somewhat still undervalue the company. So, as trading resumed this morning, we actually already expected some volatility to kick in as the market, tries to find a fair price, especially since many shareholders are still anchoring, on that bid level. So I think in terms of outlook, operationally nothing has changed. Great Eastern remains a core part of OCBC's strategy, with the bank still owning more than 90%. And it's of our view that the insurer is, financially sound as well, with strong integration benefits through the entire OCBC network. What this episode really highlights is that, minority investors in Singapore are becoming even more vocal, and I think companies will likely need to engage them more carefully in the near future. So overall, I would say the stock may be choppy in the near terms, but as the fundamentals remain solid with the backing of OCBC, it will be worth watching how liquidity and valuation settle in the weeks ahead.
And now, if you're just tuning in, we're in conversation with David Chow, Director of Azure Capital. Well, across the region, David, we want to take a look at a company called Baidu because it is seeing sharp stock underperformance on concerns over its outlook, and that has left the stock trading at the cheapest valuation among China's major internet firms. So if we look at Baidu's shares, it's slumped as much as 3% in Hong Kong today. Are you expecting a rebound in the coming weeks or months? Why or why not?
Well, in terms of valuation, it's certainly cheap. I think it's trading at a forward PE of about 10 times. Our target price for Baidu is actually $99, just I think about 14% above current prices. So the short answer is yes, we are expecting a rebound. As we could see, Baidu is still accelerating its core AI search transformation, and its earning model reiteration really integrates into various key ecosystem scenarios. While current monetization might be light in the near term, I think the company is actually prioritizing user experience for AI search, and it's our view that we believe a cost per sales ad model with a higher monetization ceiling and various AI ad products will actually unlock long-term monetization imaginations. So for non-ads, I think Baidu is expected to optimize its cloud revenue mix and accelerate its robot taxi monetization through a deeper operational presence, both globally and for expanded partnerships. So while the financials, top line decline, of about 4% in the latest quarter, I think Baidu's adjusted operating profit actually beat consensus by 15%. So this profit beat occurred, despite the gross profit margin underperforming due to increased AI cloud and content costs. And talking about cloud, its AI cloud revenue also grew quite strongly, 27% year on year, with a subscription-based model contributing over 50% of the cloud revenue. So we understand that this strong performance in the cloud segment helped to really offset declines in other areas. However, even as we are still positive about them, we acknowledge the concerns which is around its core advertising business, which remains under pressure, unfortunately, from big consumer and corporate spending. And of course, the company's AI push hasn't yet translated into meaningful earnings. So in the near term, we understand that sentiment may stay soft, but with valuations this depressed, any signs of recovery in ad spending or their ability to monetize AI could trigger a bounce. So I frame it as limited upside in the very short run, but scope for a recovery later if fundamentals improve.
And finally, before we let you go, David, South Korea is reportedly set to unveil about $150 billion in U.S. investment plans by private companies. That is during a summit between South Korean President Lee Jae-myung and U.S. President Donald Trump. And this is, of course, per a report by the Hankyoreh newspaper out today. If it turns out to be true, David, what would the investments mean for South Korean equity markets?
For the South Korean market, the implications are twofold. In the short term, investors might be cautious because this overseas investment can mean higher capex and potential pressure on free cash flow. And with that being said, Korean corporates, especially the likes of Samsung, SK Hynix, LG, and even Hyundai, are already balancing strong cash positions with global expansion plans. And the bigger picture we see is more positive. The ability to secure actually a deeper presence in the U.S. market helps to reduce your geopolitical risk. It will perhaps also ensure better access to customers and cement their role in critical supply chains, like in your semicon and your EV batteries. So while the near-term stock price reaction could be mixed depending on how much each company commits, longer term, I think this kind of investment signals growth, visibility, and competitive strength. And if this announcement goes through, I think it could ultimately be supportive of valuations, especially in Korea's flagship tech and electronic names.
I see. Thanks so much for the insights today, David. That was David Chow, Director at Azure Capital. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.